Hey YouTube, Crypto Jack again. Welcome back. I hope you've enjoyed the series so far. Today we're going to continue on. We're going to learn about parabolic markets. We're going to learn about not just markets from a macro standpoint, but also on the micro, on the lower time frame, how to trade them, what to look for, how to increase your odds of trading it successfully, not getting chopped up. Despite what most people think, parabolic markets are sometimes some of the hardest to trade. Let's take a look. Jumping right into it. Okay, this should look familiar to everybody who's traded Bitcoin for any period of time. What we're looking at down here in the blue, first off, this is our same chart that we set up in the last couple series in our trading view series. But we have switched from candles to lines just to make the parabolic run real clean. And we're going to zoom in on this in a second. We'll kind of go over why the line chart can be so helpful. Let's set the stage real quick. What we're looking at here is the final pieces of true Wyckoff accumulation. Now you got to remember, we're coming down from the previous bull market high of $1,200 or so, back up in here. We came down, price trended. And what did we do? We started forming a trade range. Trade ranges are key. We'll talk about trade ranges specifically in another video. But that is kind of, before we get into what Wyckoff truly is, we got to learn trade ranges, and now's not the time really to get into either, but I just want to set the stage of, we have a trade range, we have highs and lows, we have a run of the lows, which in the Wyckovian terms we know of as a spring. It continues to bounce back. The market says down is not the right direction. The direction is up, and off we go. Now, here's the thing. A lot of people, and justifiably so, a lot of people say, man, I wish I bought $450 Bitcoin, right? Which would have been the top of this little parabolic impulse. Today we're sitting at 37, 38,000, whatever it is at the moment. And so, yeah, it would be great to buy $400 Bitcoin, but I'll tell you what would be even better. Identifying that we were starting a parabolic uptrend. And this is where, again, we're on 4-hour candles. These are not little candles. This is this is from the 24th of September all the way into November, right? But for us to get about halfway through. Now you'll notice the final upthrust, the final maybe 10% as far as time goes, the final 10% little portion is one of the most violent and volatile. And this is a common theme across any kind of parabolic move. And this is whether it's in gold or, Tesla or whatever. No matter what the situation is, if you can at least identify a parabolic setup and then trade the break up and trade the setup, then if all you catch is this last portion, sometimes you can do really good. So even if you think you've missed a lot of the sideways accumulation, kind of the boring stuff, it's not a bad idea to hop on and see what you can do. Now, this was a nice little shakeout. Anyone who was following this trend, they probably got stopped out in there before it actually sent it. So, you're never going to hit it perfect, and don't sweat it if you do. But this is just something to keep your eye on. Now, like I was saying before, there's something better than just buying $450 Bitcoin and sitting on it, which is great. It's completely great. But what's even better than that is, say, buying $250 Bitcoin, riding that up to the highs and taking profit at some point, call it 400, call it 450. Let's just say you got out at 420, because this was getting a little too crazy, a little too carried away for you. You said, you know what? I took along here. I closed it out here. So I grew, as far as dollars goes, I grew my bag 64 to 65%. That is great. Now, if you're a student of these markets, one of the things is that what goes up must come down. Parabolic activity, even on the lower time frames, they all kind of do the same thing. They go up as high as they can, and then they collapse on themselves until they find support. And this is what you'll see across the board, no matter what it is, and even at what time frame. And so if we kind of see how this played out, lo and behold, the price went from whatever it topped out at, 465, 470, kind of irrelevant. And it came all the way back after a little consolidation, dropped to its lows at the time of $316. So imagine you rode this up to $420, sold, and got back in at $320. So that would mean that your Bitcoin bag would have grown by about 25%. So if you would have gotten out at, say, 420 and then re-entered, because macro perspective is you're long, but on the lower time frame, you just thought it was getting a little overheated, man, that's what I think would be better than just sitting on it and holding it, is growing my bag with little opportunities like this. And we're talking about over about a month and a half to 2 months, between this trade, this exit, and then re-entry for what you think will go on to be a parabolic bull run. And that is the whole point of Wyckoff accumulation, is that this is the setup for a massive run. Now, we know in hindsight that this ended up going on at about a 100x from these lower bounds right here at about $200. It went to 20,000. So if you're sitting here taking any opportunity you can to grow your bag 20, 30, 40%, by opportunities like this, exiting and then re-entering as best you can, that will pay humongous dividends. Okay. That's life-changing money on the tail end of, from here, from $300 to 20,000, whatever that is, as far as a multiple goes. If you have grown your bag from here to here and then rode it all the way to 20K, you're doing really good. So I'm trying to explain the mental process, the way that I approach this and why I even care. Because a lot of people are like, well, why don't you just sit on it? Why don't you just hold it? Well, that's great and all, but if I can grow it, I think that's even better. Now, again, within Wyckoff accumulation, there is this sign of strength, which is a macro consolidation before the formal uptrend. And we know, kind of in hindsight, that's exactly what happened, right? So this was a long sign of strength, and then it broke out and it went up. So if we kind of look at how things happened, now we can zoom out, and all of a sudden, instead of a 4-hour parabolic trend, now we're on a trend on the daily. We're looking at a daily candle parabolic uptrend on log. So anytime an asset goes parabolic on a log chart, you need to sit up in your chair and try to figure out what's going on. Now, one of the things that happened, as is often the case at the top of a bull market, everyone was looking even higher. Oh, this is in the top. We're going to go 10 times this. We're going to go 5 times this. The world is waking up. Like, this is a very, common theme. Now, if you're a fan of the streams, you'll already know what I'm probably going to talk about. And it's the Wall Street psychology chart. What people say at tops, what people say at bottoms. So those are some of the things that people often say at the top. Now, here's the thing. Even if you knew nothing about Wyckoff distribution, which occurred right there, okay, with our up thrust after distribution right here, and then our retest, and then ultimately the downtrend, and price never got back above the Wyckoff exit level, which was about 13,000, all the way till the next bull market. This was the top of the little up thrust, and we didn't actually break it until things kicked off in 2020 again. But we didn't know that at the time, right? If you were trading this, you didn't know. So even if you didn't know any of that stuff, more of the advanced principles and concepts, if all you looked at was the parabolic uptrend being broken, that's good enough. That's good enough. If all you take away from this video is learning that a break of a parabolic uptrend is the time to get out, it's the time to set cash aside, it's the time to display just a little bit of patience, then I think you'll do well no matter what market you're looking at. Now that brings us to present. What have we seen recently go parabolic in the last few days? There's all kinds of crazy things happening in the world. No, it's not on Bitcoin. It's not a Bitcoin chart. It is instead on gold, XAU USD, spot gold. Gold has gone absolutely parabolic. So this is one of the things, if you're an options trader, if you're looking for spot entries, etc., it would not be a terrible time to be looking for a little bit of an exit. Even if you are macro gold, which I am, this is just one of those scenarios where you got to ask yourself, am I more likely to be rewarded by buying here or by looking for an exit? You're either looking for an entrance or an exit. Okay, guys, I think that's going to do it this time. Thank you for your support. Be sure to like and subscribe and follow me on Twitch at twitch.tv/cryptojack and also on Twitter at _cryptojack. Thank you, guys. I'll see you next time.